Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today we have a special guest on. We have Matt Ruttenberg back from Life Inc. Retirement Services, and Matt's been on the show quite a bit, and we want to talk about today retirement options that are available for both you if you're a solo business owner, or for you if you have employees. We're talking about basically business retirement plans that are available to small business owners. So Matt, welcome back to the show.
Thanks, Mike. Appreciate it.
Yeah, and Matt's been on. We've had tons of different episodes on retirement plan options, and much of what we're going to be talking about today is just kind of a high-level overview, going through the retirement plans available to business owners. But we also have a blog post and a whole series that we did on retirement plan options last year, though. So if you look in the show notes, you'll find a blog in there. There'll be more information. If you want to dive deeper into these retirement strategies, you'll be able to do that. There's also going to be an area in there where you can connect directly with Matt. Matt will do a free consultation with you to talk about, what plan might be best for you and your specific situation. So just keep that in mind. Check out the show notes and kind of dive deeper once you've listened to this episode. So Matt, I'll let you kind of take it from here and talk about retirement options available to small business owners.
Yeah. And there's a whole slew of options out there, and there's been some changes on the contribution limits. And let's start with, the solo entrepreneurs out there. So the ones that maybe have maybe just 1099 employees, or they're using VAs, but they're actually not W-2 employees, maybe even a spouse. This will work for too. Mm-hmm. So starting off kind of on the bottom level is a SEP IRA. This is probably one of the most popular plans that's been thrown out there. It's really good for those who have no employees. They want to do the maximum contributions, or maybe not even the maximum contributions, but they want to simplify the calculation, basically. These went up from $58,000 in 2021 and bumped up to $61,000 for 2022. This would be for those who are paying themselves over the limit to get that max up to $61,000. But again, if they only want to maybe do $10,000 and they're paying themselves $40,000, this would be a great way to simplify. It's an easy turnkey plan, not too many bells and whistles, and it's all pre-tax.
Excellent.
And then the next level is simply it's a solo 401k. This is also very, very popular. The contribution limits went up from $19,500 if you're under 50 years old, up to $20,500. And if you're over 50, you can add the catch up, which did not change, of $6,500 to give you a total of $27,000 contributions. This is the fastest way to get to the maximum of $61,000, like I mentioned in the SEP. It's the same maximum if you're under 50 for a 401k, a solo 401k. You can get to that maximum faster with a solo 401k just because of the way the calculations work out. We covered that in that last episode, like you mentioned too, Mike, as well. And it's just basically the way it's split up between employer contributions and employee contributions.
Mm-hmm.
So I want to talk next about the group plans. We have various levels. We talked about this many times. It all comes down to the goals of the employer. How much do you want to put aside? Are you looking to maximize your contributions, or are you looking to recruit high quality employees? Which is a hot topic these days, is recruiting. So you have to keep yourself on top of the list of employers that employees want to work for. A great entry level plan is called the Payroll Deducted Ira. And this is basically, we're grouping together IRAs for everybody, and you're simply withholding their contributions, and then you send those to the investment company. These contribution limits stayed the same from 2021 to 2022. $6,000 if you're under 50 and $1,000 as a catch-up if you're over 50. There is no match with this type of plan. It's simply you're taking that psychological barrier of pulling money from a checking account and you're basically withholding it from their paycheck before they even get paid, and you're simply sending it to the investment company for them.
Yeah, and I think, Matt, this is one we talked about a while back, but I think this one is definitely really cool, especially for those maybe businesses that are just getting started out, and you have that employee that comes and says, hey, do you have any retirement plan? And you're like, no. We see this so many times with small business owners don't necessarily know, like, okay, do we have to have retirement? Do we do health insurance? There's so many questions as a small business owner. But this offers a really good option to say, no, we don't have a retirement plan, but we do have an option that allows us to take money out of your paycheck for retirement, and you can contribute on your side. And I just think it's a really cool placeholder for those that are just getting started and just not quite ready to bring on all these retirement plans into their business.
Right. Whether they have a lower budget, they're still trying to reinvest in the company, or they simply don't want to tie themselves up for a kind of a longer term strategy of a match or something like that. So great option. Great starter option for employers.
Yeah.
So the next level up is another quite common. It's called a simple IRA. These contribution limits went up from $13,500 in 2021 to $14,000 in 2022. They usually have two different employer contribution options. One of which is a blanket 2% contribution to all employees that are eligible, or a 3% match to those who contribute themselves. Very simple, like we talked about before. This is a great option. There are no out-of-pocket administration costs for a plan like this. You're basically limited to some investment companies and then also all pre-tax contributions. So there is no Roth option inside of these, unfortunately. But this is a great step 2, I call it, for group level 401ks for employers who have full-time employees, W-2 employees. The next level would be the 401k. Now, this is if you have a safe harbor 401k, or if you have a standard or traditional 401k. And just a kind of a quick recap on the safe harbor 401k. A safe harbor is used. It has pre-approved contribution vesting and matching schedules, and these allow the employer to maximize their contributions. It removes some of the annual testing requirements that the IRS has by having these pre-approved vesting and matching schedules. If you have a traditional 401k, it's the same thing. You have the Roth option, you have the traditional option or pre-tax option. The only difference is you can kind of, I like to call it, and we discussed earlier, Mike, cafeteria style 401k plan where you can pick and choose your match, your vesting schedule. So maybe you only want to do 25% up to 5%, and you want to spread that vesting schedule out 5 years because you want to make sure that your employees stay with you. That went up from $19,500 up to $20,500. So it increased by $1,000 from 2021 to 2022. The catch-up is the same at $6,500, so it gets you back up to $27,000 if you're over 50. But now it's at $20,500 if you are under 50. Great, and probably the most popular plan out there is the Safe Harbor 401k because it allows the employer to kind of contribute whatever they want, in regardless of what your employees are doing.
Yeah, no, that's great. So just as kind of a recap of just those two categories we've talked about so far, and again, as we mentioned at the beginning of the episode, if you're interested in any one of these specific plans or learning more about the plans, we did a whole series on deep diving into each individual one. So check in the show notes for links to those. But if you have no employees, or your only employees are maybe family members, a spouse, children, things like that, there's kind of two options that we look at as for retirement plan options. We have the SEP IRA and the solo 401k. And with the SEP IRA, the maximum went from 58,000 in 2021 to now 61,000 this year in 2022, right, Matt?
Yep, absolutely.
And again, that's going to be the SEP IRA is based on 25% of your salary if you're a W-2 employee and like as an S corporation owner, or if you're a sole prop, it's limited to 20% of your income from the business. So we have the SEP IRA and then we have the solo 401k. Solo 401k has two different pieces. You have the employee portion or the employer portion. And the employee portion went from $19,500 to $20,500 here in 2022. Mm-hmm. And then we have the max at the solo 401k is again that 61,000, similar to the SEP. And obviously, same thing with the solo 401k is that you have a 25% match by the employer side on the W-2 income for that.
That's right.
So when we look at no employees and you're just kind of looking to handle retirement for yourself as the owner, those are kind of the two main options that we look at.
Yep, absolutely. Absolutely.
And I love for when we look at a group plan, this is an area where now you do have employees outside of family that are options available. We talked about that payroll deducted IRA, which I think is just a great option to it. If you're not going to have anything, have this. If you don't plan to offer retirement plans, at least offer this because it's super easy. And Matt has talked about in previous episodes, he calls it his placeholder until you're ready to kind of upgrade to that next plan, which I think is a great reference point to it. But then from there, you have the simple IRA and say the safe harbor 401k would kind of be the next simple IRA step, and then the safe harbor 401k from there. And with the simple, the contributions went from 13,000 in 2021 to now 14,000 in 2022. And then with the safe harbor 401k, again, that 19,500 on the employer side went to 20,500. And remember, with all these plans, if you're over 50, there's also some additional catch-up limits. So that can give you at least a good quick rundown of, okay, what plan options are available to those with employees as well.
Yep, absolutely. Absolutely.
Yeah, I know, Matt. Yeah, go ahead.
Go ahead. I was going to talk about the advanced stuff too.
Yeah, I know. From there, so we talked about solo, no employees options. Now you have employees, but let's just say you're a business owner. You're just saying, okay, now I want to go a little bit deeper. I want to contribute more. Or I have some other employees that we want to contribute more for. Where can the options? What does that look like? And so that's where I'll open it back up to you, Matt.
Okay. Yep. Sounds good. So going into the advanced planning that we work with quite a bit with clients, profit sharing is number one. And this goes with a part of the solo 401k. So we talk about the $61,000 limit for the solo 401k. Profit sharing is the portion of that that is the employer contribution, which we talked about, the 25% or 20%. This did go up from 58 to 61, like we talked about, but it's okay to have all of your contributions be be employer contributions of the 61,000. And when we talk about it, when there's a group involved, so if you have W-2 employees, there's a couple different ways to calculate your profit sharing. Whether we want to try to target certain employees, or if we want to just have a blanket percentage across the board. Whatever the goal is, we'll calculate that for you, and we'll be able to figure out how we can get you as the employer the majority of it, or if you want to have a blanket percentage across the board. So profit sharing is the first level of advanced techniques when it comes to employer contributions. Mm-hmm. The next step is it's called the cash balance plan, which is very popular these days. It's a form of defined benefit plan. In other words, a pension plan. But the cash balance plan has become very popular because of its contribution limits. The contribution limits went up from $230,000 pre-tax to $245,000 pre-tax. And if you haven't heard these numbers before, you're probably going to be have some wide open eyes here. This is also stacking on top of the profit sharing in the 401k plan that we talked about earlier. So yes, you can get well above $300,000. Now these are age banded. So the older you are, the closer to retirement you are, the higher these contribution limits go. We get a lot of younger entrepreneurs over $100,000 pre-tax with these types of plans, and the fact that it went up 15,000 more in 2022 just makes it even more popular and more of a topic of discussion that a lot of these highly successful employers or solo entrepreneurs need to look at to try to keep as much taxes as they much of their income as they can without giving it to Uncle Sam.
Yeah. That's great. And I think, when it comes down to it, when we're talking about retirement plans, what's best for you, there is no just blanket statement to say this is the plan that's going to be perfect for every single business owner out there. And so, what I always recommend is I think it's really good for business owners, and that's what we talk about on this podcast, to really gain their knowledge of what's available out there, what options are available, and understanding those options. And so I think it's good to know this knowledge of the different plans that are available. But ultimately, when it comes down to it, if you have employees and you're looking to set up a retirement plan, the biggest thing is you just want to get connected with somebody that can go through your specific situation and kind of go through what options are available to you and really kind of help you along this line of picking out the best option for you. And so that's why we've always kind of worked really closely with Matt. Whenever we have a client that comes to us or someone in our tax minimization program that comes to us that says, hey, I need some retirement help, we'll give them the data that they need and say, okay, here's some of the options available. Here's what we'd probably recommend. But ultimately, we don't know the age of your employee base. We don't know all this types of data. And so we're going to say, talk to Matt, let him decide and work with you on the best plan. And then from a tax standpoint, we'll start to implement that. So, which also brings up a good point. We had Matt on our tax minimization program monthly group training in January. So we kind of deep dove into much of these different retirement plan options. So if you're interested in learning more about that, you obviously have the opportunity to join our tax minimization program. We talk about not only this type of topic, but tons of other topics. So if you're not a member yet, go to taxsavingspodcast.com/tax. Again, that's our tax minimization program. And we had Matt on there deep diving into these specific strategies that we talked about today. But that's taxsavingspodcast.com/tax. So again, I just want to kind of reiterate that. The idea behind this is let's find out which plan's available to you, even if you have no employees, even if you're just yourself and maybe a spouse, something like that. We still have to decide between the SEP and the solo. And so that's where we're going to kind of want to dive deeper, how much you're looking to contribute. And that's where, someone like Matt can come in and help you out. As mentioned, if you go to our show notes, there'll be a blog post in there where you can connect with Matt. But Matt, just to kind of finalize a lot of this stuff, tell them a little bit about what does the process look like? So I'm a new business owner, or I'm a business owner that's been around for a while. I finally want to start offering retirement or having a plan for myself. What does that process look like when I come to you and say, okay, I'm interested in a retirement plan, but I don't know where to start. Where do you go, and kind of what is the time frame on getting one of these set up and implementing those types of things?
Yeah, great question. And I'll start off with what you mentioned already. Pick up the phone or shoot an email off to me or Mike. Have Mike introduce you to me. Just getting the conversation started, even in the beginning of the year. Earlier the better. There's deadlines. There's so many options. There's so many variables involved. What can I do? Even if you're just thinking about maybe I want to start a plan. We speak to a lot of business owners 6 months, a year, 2 years before they even are ready to implement, just so they understand. It's not as turnkey as advertised sometimes that you see out there. So pick up the phone or shoot me an email. I'll be happy to answer any questions that you have. No problem whatsoever.
Yeah, I was just going to say, I think we had someone the other day where they were just starting out. They have no money yet. I mean, their business isn't operating yet. They have no intentions to need a retirement plan, but they're like, I want to talk to somebody because I'm going to grow this business. I'm going to get to that area, and I don't want to be so deep into this business without kind of planning out what I want to do for retirement plan. So I think they were probably a year, 2 years out, and we were at least able to guide them in a direction. Just think of, to let them know what they should be thinking about as they're growing this business, as they're gaining employees, what they should be thinking about in this retirement space too. So just to back that up, that Matt's been excellent as far as guiding our clients through that process.
100%. Yeah. A lot of my day is educating. So I'm happy to educate anyone one-on-one anytime. So yeah, appreciate that. So really the process of opening a 401k or any of these retirement plans is pretty simple in regards to what needs to happen. So you have to give out notices to your employees, 30 days for one of the examples, to tell them even that you're opening a 401k plan. And then there's a few other ones out there if you're shutting down one plan and starting another. But the notices is the number one thing. So, for example, if there's a safe harbor deadline of October 1st, we can't get things started on September 15th because we need that 30-day notice to the employees. That's an IRS guideline. But it's pretty quite simple. Once you get the paperwork, plans can get up and running in 30 days. It's basically getting everyone enrolled, give them an education meeting so they understand what the plan is all about, and then you start contributing to the plan. Like we said earlier, doing it last minute. End of the year is the busiest time of the year for us because of a lot of last minute folks saying, you know what, I had a better year than I expected, especially, in 2021, this was particularly interesting. A lot of people had a much better year than they expected. So at the last minute, the last 2 weeks, they tried to start a plan, generally solo 401ks. And yeah, we got a lot of them open for them. But at the same time, getting things prepped so you understand what's going to happen is much more helpful on all parties, especially for yourself as the employer. One less stress that you have to worry about. But we hold everyone's hand. We work with a lot of DIY investors for those who want to invest their own money. But we also can work with folks who need a little assistance and take some of that fiduciary liability off of your shoulders.
Yeah. And I think, we've used Matt for our retirement plan in our company. And, one of the nice things, especially is on that onboarding, that getting the client in front of you or getting the employees and onboarded, educated, things like that. It's so nice to say, okay, we don't have to answer necessarily those technical questions that maybe as an employer, you don't even know. Matt and his team is there to kind of answer any questions they have, walk them through the process. And it's been really smooth from that standpoint. One last thing, Matt, before we go is as we have potential listeners that are looking to get information, what type of things should they be gathering prior to having that call with you? So like when does a potential business owner know, okay, what do I need to grab and when would it make sense to have that conversation with you?
The number one tool that we really need to look at when evaluating the best plan for an employer, and most particularly with group plans, is a census. A census basically gives us a rundown of your employees. Who is the owner? Are there any highly compensated employees? How much does each one earn? What are their ages? What's their tenure with the company? And this will it allows us to give folks a precise number of what and how much they can expect to contribute or give a match. And it helps build a budget, honestly. So if you're not really sure how much is a 401k going to cost me as an employer, send us a census. We'll be able to calculate that for you. It's pretty quick and pretty easy. But other than that, a lot of this is fairly simple. We just need your EIN numbers. We need to know who the owners are. We need to know how many companies you own. And if we require anything else beyond that, we'll ask. But it's fairly simple, honestly. A lot of the information you have is on the top of your head. Excellent.
So just kind of a recap, as we mentioned, if you're a solo business owner, no employees, outside of family, spouse maybe, two options that we're looking at, SEP IRA or solo 401k. If you have looking more of a group plan, this is when you would have employees outside of family. We look at a payroll deducted IRA, a simple IRA, safe harbor 401k. And then obviously with all those, we have kind of a higher level for looking to max out retirement contributions with a profit sharing or a cash balance plan. So those are kind of the options that we talked about. Again, we have a link in the show notes if you want to go to there. We'll have kind of a summary of what we talked about today, along with links to our previous blog and podcast episodes where we deep dove into more of these specific strategies. And again, Matt was with our tax minimization program for our January monthly group training session, where we just took a deep dive into this. So if you're not part of the tax minimization program, feel free to join now. We have recordings of all of our previously monthly group sessions, so you'll be able to check out what Matt talked about in that one, as well as you have access to our team to ask those general tax and accounting questions. So it might be a great resource if you're looking to start down this route. You can join and check out our tax minimization program at taxsavingspodcast.com. Matt, I appreciate you coming on, and I know we're going to have you on in future episodes as we look at some things we need to know before year end, some deadlines to open these accounts and things like that. So I just appreciate you always coming on to the episode or to the podcast and helping out these small business owners that are looking for retirement help.
Yeah, absolutely. Thanks, Mike, for having me on. I appreciate it.
Excellent.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.